Gold keeps smashing records, over 30 record highs this year alone. Prices recently touched nearly $3,700 an ounce, even topping inflation-adjusted highs from the 1980s. But here's the big question. With gold performing this well, should you think about selling, or is there still more upside left? Let's break it down. Experts say don't panic if you feel like you've missed it. Chris Mancini from Gabelli Funds believes gold still makes sense, pointing to the move away from the US dollar as a global reserve currency, the ballooning US debt to GDP ratio since the pandemic, rising budget deficits and questions around Federal Reserve independence. All of these trends continue to support gold as a hedge. Louis Laval from Frontier Investments calls gold an insurance policy. You don't cancel your insurance when the premium goes up. You don't double down when it pays out. You simply right-size it in your portfolio and let it do its job. That means gold isn't about chasing short-term gains, it's about long-term balance. So, how much should investors actually allocate? Many advisors still suggest 5% to 10% of your portfolio in gold. UBS, on the other hand, says keep it under 5%, reminding investors that gold doesn't generate yield like bonds, which are now offering over 5%. The right allocation depends on your risk tolerance and portfolio mix. In other words, if your gold allocation has grown past your target, consider trimming. If it's below, maybe add more. Let's not forget, gold can be volatile. Yes, it's a safe haven asset, but there's always a chance of a pullback after such a huge run. So while the case for holding gold is strong, timing short-term trades can be risky. Here's why demand is unlikely to fade anytime soon. Central banks are buying record amounts of gold, over 1,000 metric tons each year for the last 3 years. Geopolitical tensions, from the Russia-Ukraine war to US-China friction, are driving safe haven demand. Global gold ETFs have seen billions in inflows this year, showing rising investor confidence. Ryan McIntyre at Sprott Asset Management even argues gold is evolving beyond just insurance. It's becoming a strategic reserve asset, a kind of alternative monetary anchor. Despite already hitting multiple record highs, analysts believe there's still runway left. Dina Ting from Franklin Templeton points out, sticky inflation, new tariffs reigniting supply chain price pressures and central bank accumulation. All of these could keep gold's rally going. So, is it time to sell gold? Not necessarily. Most experts suggest holding your allocation steady, using gold as insurance and not trying to time every move. As always, the right approach depends on your goals and risk tolerance. What do you think? Are you holding on to your gold, adding more, or taking profits after this massive rally? Drop your thoughts in the comments below, and don't forget to like, share, and subscribe for more updates on markets and investing.